Well, after their best day in weeks yesterday, the European markets are again on the slide. Investors are nervous about the prospects for economic growth and the health of some European banks. Joining me now from London is Stephen Pope, Head of Equities Research at Cantor Fitzgerald Europe. Stephen Pope, welcome to Lateline Business.
Thank you very much. Always a pleasure.
I see the market's off a bit again today, as I said. Is that still on European fears or more UK employment concerns now?
I think there's a whole range of global issues have got behind the slip in the European markets. You know, from midday yesterday we started falling because the ISM services index in the States was lower than was expected. Still growing, but slower than we thought. And I think you could see that the Asian markets were off, the US futures were not looking encouraging, and then there were one or two European statistics that were not too encouraging. And as you mentioned, behind all of that we have this ongoing worry about what will the European Union bank stress test reveal.
Yeah. Well, indeed, there's some development there. We may get more details later today from Europe. Is that going to reassure the market, do you think?
Well, provided the detail that comes through shows that the tests are going to be quite rigorous and demanding. It's no good just having a sort of very limp-wristed type of test, so any bank can pass it. What we need to find out is some real sort of toughness going through, and we want to find out if there's going to be a sovereign default scenario built in either for one nation or perhaps two. And that would then really show which banks are exposed. And, of course, we have a divided school of thought here in Europe in that should all the results be put out there, be transparent so we see who did what, or should they just keep it secret and we accept an authority on saying, well, these banks are okay and those ones are not so okay?
An economist at RBS said yesterday, this week, that it would be unwise for European policymakers to go on holiday this year. How do you think the credibility of the ECB is amongst market makers?
Well, I've actually been quite critical of the ECB because if you look through, there's been a whole series of issues where Jean-Claude Trichet has said one thing and then suddenly he's turned around and done another. He didn't want the IMF involved in any European situation, and then he was very pleased they were involved. He said he would never engage in quantitative easing, and suddenly the next day he was out there doing it. And the thing is, the ECB are continuing to buy distressed European sovereign bonds, and that means the quality of the balance sheet is being undermined. Even if there's a degree of sterilisation to soak up the excess liquidity they put in the system, the actual quality of the ECB's balance sheet is being weakened, and we're going to find this will continue through the summer. So we have a divided camp in Europe, and certainly the ECB itself is divided as to how long and how much they should continue on that QE route.
I see today new research out by ING is not obviously helping confidence. It's suggesting that if the EMU collapsed, inflation in Spain and Portugal would soar towards double-digit, and there'd be a fall in output in the first year alone of between 5 and 9% across Europe. I mean, this sort of research coming out from that sort of quality bank must be very alarming.
I certainly think it is when a bank of that nature does come out with those numbers, but I think we have an environment where we can have extremes of view. Certainly if you were to see a sentiment of a collapse in the euro structure, and maybe you had some of these distressed nations on the Mediterranean coast having to withdraw, there would be a lot of problems because you'd have to renegotiate as to what's going to happen to existing debt, what exchange rate, say Greece went back to the drachma or Spain went to the peseta again, what exchange rate would they use for those debts against the euro? How would you reschedule it, and what sort of haircut or, dollars on the pound would you be able to take? So it really is a situation whereby I think there could be an awful lot of dislocation, and it would cause a big spread of panic amongst those banks that are exposed.
If we're looking for positive news, I guess we head to China today, the biggest IPO ever, $22 billion for the Agricultural Bank of China. It looks as though they're going to get it away.
It does. Certainly I saw the early report saying that 19.2 was raised, and with the over-allotment facility they have, they could bring it up to 22. I think what the success was actually having far more of the allotment based out in Hong Kong as against Shanghai. And that's drawn in a number of investors from around the world, including some of the very wealthy sovereign wealth funds who are sitting on piles of cash, wanting somewhere useful to put the money. And it just shows if you have a very interesting story and a well-managed issue, then you can get an IPO float away, unlike some of the less established names who've had to make reductions and withdraw from the market rather than take a 25% price cut.
That is a huge deal. There are some more huge deals coming in the pipeline for Chinese banks, the Bank of China and ICBC. Is this likely to soak up, a lot of the demand? Is it going to impact on other markets?
I think at the current time, other markets are sort of been meandering along because this wall of money is not being put to work. For example, we've heard that the S&P 500 companies in the US are sitting on something in the region of $1.2 to $1.8 trillion of cash. Now that's hugely amount compared to what they had in 2006. And the thing is, they just don't know where to put the money to work at the current time. Investing it in government bond yields at the front part of any curve is not giving you much return at all. So I think when you have IPOs of this nature, it's just soaking up some of that liquidity. It's not currently denying the flow of funds into existing markets because we haven't seen it. Or if you were to be a little bit more courageous, you look at the European action on Tuesday where we moved higher, and then you think of it today where we've taken that money off the table. I think there's no long-term investment strategy at the current time. We're in the summer, it's thin volume, and people are almost trading it day by day. If you can make a profit today, book it, take it, and then reconfigure how you're going to trade the market. So I think it's a good diversion for those funds that are just sitting around idle.
And what is the view of the market now over in Europe on the Australian mining tax that's come in? I noticed that BHP, Rio Tinto, Xstrata, all London listed, they all had a good day yesterday. Is the market feeling good about the new policy?
Yes, I think that generally speaking there was a lot of relief when it was sensed that there's going to have to be a rethink upon how this tax would be structured, if at all. So that was good for the markets and good for the mining shares. I think yesterday we saw a position where anything in the mining territory had been very severely beaten up on the downside, and perhaps disproportionately so given the earnings that they're in and that they have a unique position in the sort of industrial world. So I believe it was right we saw them trade higher yesterday. They've backed off a little bit in early European trading, but they're not the worst sector in Europe at all. So I would imagine that it is cyclical. It will sort of bounce around quite a bit. But overall, I think we're seeing that the better news is in place now for the mining industry. And the fact that you had recently China looking to move towards a free float shows they're thinking more of domestic demand. But that's going to have to go hand in hand with Chinese infrastructure build. And you add in what has to go on in India for their infrastructure build, it just plays very nicely to the Australian mining company's story. So I think you will start to see them moving better as the year progresses.
Stephen Pope, thank you very much for joining us again.
Thank you very much.